right, let's get started. Welcome to Deep in the Heart of Taxes, the only show that takes the time to boil down all the tax law news that's fit to share, and some that isn't, so that you don't have to. I'm your host, Jack Manhire. Let's hit the headlines. We talk a lot about income tax, corporate tax, sometimes payroll tax on this show, but let's not forget that other tax, the liquor tax. Certainly, the Attorney General for Ohio has not forgotten it. Attorney General David Yost filed a preliminary injunction with the U.S. District Court for the Southern District of Ohio's Eastern Division to immediately stop illegal liquor and wine shipments into Ohio. He cites the loss of tax revenue and the loss of sales for local family-owned suppliers all across the state. Now, who realized that this was a big problem? His office did. They did an investigation. And they say throughout May, they did the secret shopper investigation, and folks using pseudonyms confirmed that a multitude of direct-to-consumer sales by companies such as Wine.com, Wine Country gift baskets, Ace Spirits, etc., were responsible for liquor and wine coming into the state of Ohio. Attorney General Yost says, quote, "These distributors are flagrantly skirting the law and keeping Ohio from collecting tax money it is entitled to. We're not talking nickels and dimes here. The tax revenue lost due to online liquor sales could be anywhere from tens of thousands, even to millions of dollars." Yost said that multiple out-of-state wine and spirit providers have found a way around Ohio's law that prohibits the shipments of these products directly to consumers. And he said the law is designed to protect Ohio liquor businesses from illegal competition. Now, one of the interesting things about this injunction, the preliminary injunction that he filed, is that it invokes the U.S. Constitution's 21st Amendment, which empowers each state to regulate the imports and transportation of liquor. I have to check on this, but this might actually be the first ever case to invoke the 21st Amendment to deal with this issue. But we shall see, and I'll keep you updated on Ohio's liquor problem. Every attorney, at least since their second year of law school, understands that the U.S. Supreme Court issues its very last opinion for a term in late June, usually at the very end of June. And that last opinion for the term is usually the doozy, the big one that everybody's been waiting for. This year, the court's a little backed up because of the affliction, but they made up some time, and the Supreme Court announced that it will make and release its very last decision of the term this Thursday at 10 a.m. Eastern Time. That's 9 o'clock in the morning for all you Texans out there. It also means that they will most likely reveal their ruling on whether Congress and, in a related case, a New York State prosecutor can access President Donald Trump's business records, including his tax returns. That certainly is the doozy this term. Three House committees issued subpoenas for several years worth of financial records from the accounting firm that did the work for Trump's organizations, and also from two banks that loaned money to President Trump's businesses, Capital One and Deutsche Bank. House Democrats said that they believe President Trump's tax returns might provide insights into a question that special counsel Robert Mueller never answered. And that question is, did the president borrow money from Russian entities or otherwise do business with Russia or its entities before he became the president? The president, of course, has consistently denied any such relationship. And not only is it Congress, but that related case is from a Manhattan district attorney, Cyrus Vance. He's seeking 8 years worth of President Trump's business and personal tax records for an investigation into payments made to two women who claimed that they had affairs with Trump. Allegations the president has, again, consistently denied. Vance was said to be looking at whether the payments violated state tax or business regulations. Now, President Trump has fought these subpoenas and lost in lower courts. So this podcast will drop on Wednesday, and we'll see what tomorrow brings at, again, 10 a.m. Eastern Time. Lawrence Zlatkin, Coinbase Exchange's chief tax officer, predicts that capital will flee the U.S. because of its ambiguity around crypto tax laws. Now, Zlatkin says that while the IRS has given advice and guidance that pushes U.S. citizens to include crypto on their tax returns, and they've done this for years, the agency has yet to provide comprehensive guidelines, especially around certain activities that may or may not be taxable transactions. An example he gives is what's called staking, which is the practice of locking crypto to receive rewards. And there's a lot of uncertainty around the taxation of staking. Now, Zlatkin believes that the IRS will likely label staking rewards as a taxable transaction, but he doesn't know. And we're not sure if there's any clearer guidance or any more clear oracle out there that's going to be able to predict that. Until the IRS reduces its ambiguity around this issue, Zlatkin sees Coinbase looking to international customers as the future because non-U.S. jurisdictions seem to be more, quote, open-minded. Yesterday, I told you about the city of Seattle's new Jumpstart tax, the tax that is supposed to go after companies with large payrolls. And especially in response, at least I speculated it was in response to the quote-unquote tax Amazon movement that's been happening largely in the Seattle area. But what are the consequences of this tax? Now, of course, the people in the city council who passed the Jumpstart tax are hoping that it's going to mean more money in their coffers. And that is what most of the reports yesterday said. But there's always another side. There's always another reaction that people often will give when higher taxes are imposed on them, especially companies. And that other reaction is sometimes, well, I'm moving. I'm out. You're going to tax me more? See ya. I'll tell you, here in Texas, we see a lot of folks coming from the West Coast lately, especially from California, because of the very same issue on the personal tax level. So the city of Seattle has this new Jumpstart tax. It essentially targets any business with $7 million or more in payroll, and it charges them 0.7% for every employee who makes $150,000 or more. It's a tiered structure, but that's basically how that works. Well, let's say that they're going after Amazon. What can Amazon do? I'm not really sure about all of Amazon's operations. I'm sure there's some operations that are more difficult to move, but it is conceivable, more conceivable maybe than it was 4 months ago, that Amazon and larger companies, even companies that we don't necessarily know about, will simply move from Seattle. And this has been proven to be easier for some companies over the last 4 months since the lockdowns, since the affliction happened to us all. What happened? Well, people got resourceful, companies got resourceful. At Texas A&M University, we did the same thing. We all figured out how to do our jobs remotely. We figured out how to do our jobs mostly from home, okay? But certainly in remote locations, not in the typical workplace where everybody else is. If that's the case, and more people now know how to do their jobs and perform those jobs well from home, to me, that says there's a higher probability that companies like Amazon and companies that have the mobility will simply leave, that they're not going to pay the tax. And therefore, programs like the Jumpstart tax could very well catch a few fish in the net, but it might not catch a lot. certainly the catch might not be as big as they were hoping for. Now, of course, we'll see. This is just my opinion, and it's my speculation. But it will be very interesting to see that, especially after the affliction, and for those of you that didn't tune in yesterday, I have to call it the affliction because using other words for it is sometimes frowned upon by our lovely platform host. Since the affliction, people are more mobile. The jobs are more mobile. We will see what happens. So watch this space. And for all my tax nerd friends out there, I wanted to pass along something from Paul Caron's Tax Prof blog. Please know that South Carolina Law Review is calling for papers. They're doing a special virtual symposium on February 19th, 2021 at the University of South Carolina School of Law, and it's hosted by the Blackboard Collaborate Ultra. The theme is on taxation, finance, and racial justice. From Paul Caron's Tax Prof blog, quote, "Tax law and policy plays an essential role in defining the ways in which individuals relate to and support one another. Revenue, needs, and spending policy are inextricably entwined and reflect and reinforce a society's understanding of what each individual owes to and is owed by the society in which she lives, how tax defines income, whom it taxes, their relative contributions, and the activities that our tax system chooses to subsidize or not create countless points of overlap between tax and racial justice." The goal of the symposium is to critically examine the intersection of tax law and policy, finance, and racial justice through both a chronicling of the past and detailing pathways to reform. Topics may include, but are not limited to, the past and current impact of federal tax law and policy on historically marginalized groups, the role of state tax systems in exacerbating and/or perpetuating racial injustice, and how tax law may be reimagined to advance racial justice at the state and the federal levels. End quote. Now, South Carolina Law Review is seeking submissions for original papers to address these broad range of topics, again, related to taxation, finance, and racial justice. And if you're interested, if you're one of my professor friends out there, or if you're just a tax nerd and have something to say about this, you should submit a 500-word abstract to the email address for South Carolina, and I will put that in the description below along with the other show notes, okay? You want to submit that 500-word abstract to South Carolina with the subject line, taxation, finance, and racial justice, and here's the important part, by the deadline of October 1st, 2020. So you have a little less than 3 months to work on it, okay? And they will consider it. They are, in fact, looking for interdisciplinary work from academics, practitioners, and other professionals who work on issues at this intersection of tax, finance, and racial justice. And they are encouraging submissions from people that work at that intersection. If you're selected, they're going to be looking for a completed paper somewhere between 6,000 and 18,000 words, and it will be due to the Law Review's editorial board by January 1st of 2021. So that's the show for today. If you liked it, please hit the like button, the thumbs up button, and you want to share it with your friends, share it with your colleagues, share it with your family, share it with your neighbors. I'm sure you haven't seen them face to face for a while, but especially if you would, please share it on other platforms, Facebook, Twitter, etc. Facebook usually gives us the widest possible audience. Also, please make sure to subscribe and hit the bell icon to be notified of future shows, especially if you want to take part in the live chats that we'll be having in our future shows. Thanks for listening today to Deep in the Heart of Taxes. I'm Jack Manhire, wishing you many happy returns.